today, but Manav is with us. Manav, a quick thought here. The index doing so well. Last 1 hour has been a big trade. How are you approaching?
See, most importantly, the markets have held on to its the important support of 10,000, 10,100, a very strong reversal from those levels, and the prices after after a couple of trading sessions, has breached the crucial hurdles of 10,250 decisively today. And I sense that on the immediate basis, you will see a short-term rally towards 10,450. But what we were discussing last time, I think we are still there, on a medium-term perspective, I think 10,750 is going to be the upside targets that we're looking at. Bank Nifty specifically, has seen a very strong base formation around the levels of 24,300, 24,500. It has on the upside 25,100 is the resistance. Once if we breach that, we are going to see a short-term rally of another 500 to 800 points. But on the larger time frame, 26,200 is what we are looking at. So I think Nifty, Bank Nifty all together is going to see a very good rally. PSU banks from the banking space is going to see a very good up move in the near term. So
let's talk about the trading play here. Yeah. What are you recommending on?
Yes, at the current levels, we have three topics. The first buy call is on Axis Bank. The prices after a good short-term reversal has breached its important trend line resistance, which is confirming a good short-term bottom in place. The prices have also held its important weekly support clusters on its long-term averages. So, it's clearly indicating that the prices are forming a good higher base. Volumes are also suggesting some good momentum shift. So, it has a very strong support at 560 on the lower side. We recommend a buy into this with a stop of 554 for an upside target of 620. My second buy call is on Union Bank. The PSU banks as a whole, has seen a very good momentum shift happen yesterday in a couple of trading sessions, and Union Bank specifically yesterday observed historical highs cash volumes and with a breakout on the weekly perspective. So it's not only indicating a short-term reversal, but it's indicating that, I will not be surprised to see a good sharp 15-20% move in a very short span of time. So this is definitely a buy if somebody wants a very good short-term alpha. So 71 is the stop loss we are recommending for an upside target of 86. My last call would be a buy on PTC. The prices on the weekly monthly charts has formed a very good base formation. It has formed a morning star with a double bottom. So it clearly indicates that there is limited downside from the current levels, and since the prices are in deep oversold levels, I sense that we could see a good swift upside of another 20%. So it has strong support at 72. We recommend a buy in this with a stop loss of 70 for an upside target of 90.
Okay. Would you have a call on Tata Steel? The stock has been quite weak in today's session.
In fact, metal as a space, is likely going to be in a consolidation zone. I don't see a very good sharp move on the immediate basis. In fact, if I have to pick something from the metal space, Tata Steel would be an avoid. In fact, it is just trying to form a base formation around the levels of 530 on the immediate basis, and has strong resistance at 560. So, this could be trading in a broad range of 4 to 5%. But if I have to pick something from the metal space, I think JSW Steel looks very well placed. The price has actually declined from its recent peak, and it's hovering near its 200 EMA. Some good short-term accumulation pattern has been observed on our intraday charts and has very good margin of safety. So 335, 330 is an important support. One can have a stop placed below 330 or a stop loss of only 8 points. But in case if the trade works out, you can get the immediate targets close to 365 to 370.
Okay, it is in fact, but so while JSW Steel is the idea, Tata Steel is the top Nifty loser today, and Bloomberg reported that the European Commission is going to conduct a probe into the Tata Steel ThyssenKrupp merger. Nikki Panchandan is standing by to talk about what's being investigated and how that may impact the company. Nikki.
Hi Neeraj. In the morning it was reported that Tata Steel and ThyssenKrupp JV will face an in-depth probe coming in from European Union on account of a couple of concerns which relate to the competition that will stand reduced in supply of various high-end steels. This move comes at a time when steelmakers are already struggling with trade barriers, and EU has set March 2019 as a deadline to issue final ruling on the proposed deal between the two giants. However, Tata Steel, we saw the stock actually slipping as much as 6.5% in the morning trade. However, there is some recovery which has come on for. The company has now trading with losses around 2.5%. This is post the clarification that came in on the exchanges, where the company said that the company has noted concern, Tata Steel has noted concerns and will continue the discussion with the European Commission. The proposed JV is subject to merger control clearance in several jurisdictions, including the European Union, and the company would provide further information and analysis to secure the required approval for the proposed JV.
Got that. Nikki, thanks a lot for highlighting the same for us. Tata Steel, one of the top losers on the index this afternoon, down about 3.5%. Keep an eye out for numbers which are coming in thick and fast. Balrampur Chini reporting its quarter 2 numbers. The revenue at 1,015 odd crores has come in slightly lower. EBITDA is also down 1.8% at 141.1 crores. The stock is down 5.5% at this point. 104 is where it's trading at.
Devin, I must add though that it might not be the right move to judge a company like Balrampur or any of the other sugar companies based on what they've done in the quarter gone by. I think the real meat in the sugar business starts from the new crushing season, wherein the production would be higher. The pricing, some of these hold inventory which is priced at 25-26 rupees. The current prices northwards of 29 or 30 because of the minimum support price that the government has indicated. And if indeed the ethanol tenders which are now out in the open get subscribed to and they are able to supply ethanol at a higher price, and that might just materially change the dynamics. So yes, the stock is down today. The stocks have cooled off as well. In fact, Narendra Murkum that we spoke to also mentioned to the same effect. But maybe, just maybe, the real results from the sugar companies, if indeed they are to perform, could start off only in a quarter or two. This might not be the right time to look at some of these names. Talk to Gurmeet Chadda of Complete Circle Consultancy, joins us right now on the show, where we started off maybe with Tata Steel, but since we're on the topic of Balrampur Chini and the numbers, Gurmeet, thanks so much for joining in. Some numbers on the screen. EBITDA down slightly, the net profit also marginally off, revenue numbers looking okay. Have you looked at sugar recently?
Yes, Neeraj, and as you rightly pointed out, while there will be some knee-jerk reaction to the numbers, I think the real story begins, as you rightly said, when the crushing season starts. MSP picks up. We have seen even in overseas, production cuts being announced across countries. So that flooding of sugar, which was a real concern, could slightly ebb out a bit. And I think the ethanol, I think this could be a big structural move if it were to phase out. So we can't really give a fundamental call on something like sugar, which is so heavily regulated, a lot of interventions, but definitely could be a good trading call from a near-term perspective.
All right. What are you doing, Gurmeet, in the medium term to long term right now?
So, we are seeing, a very smart sector rotation in the market. We've seen how, so it was retail banks and NBFCs, a couple of quarters back, and we've seen now how the focus has shifted quickly to the corporate lenders and some of the PSUs. So within the BFSI, we have had discussions on value, migration from PSUs to private to NBFCs. I think we'll see some reversion there. And if you see even the Bank of Baroda numbers, if you see the gross slippages are just 2,200 crores, which is like a 7-8 quarter low. The NIMs have been very steady despite the changes in interest rate cycle. We've seen ICICI Bank numbers being very, very appreciated. Stock has already made a move in this kind of a market. So corporate lenders, I think, is where we are asking clients to gradually, and I deliberately emphasize on the word gradually, because I think the market will take a little more time to absorb a lot of action around us. So corporate lending banks has been one addition. EPC space, again, that's another rotation happening. We've seen capital good companies. We saw Cummins. Probably L&T will come up with numbers today. If you look at escorts, there also the construction business and the railway business has contributed to the 30% jump in revenues. So that's another space which we are asking clients to gradually get, and selectively some pharma and IT names. So, but doing it very, very selectively.
Okay. Those are some of the ideas there from Gurmeet. Edelweiss is up 5%, again locked up on upper circuit. Remember, ever since it's reported its numbers, there have actually been no sellers available for the stock. So from a level of 137, the day it reported numbers, the stock's now trading at 162. So it's definitely seen some amount of buying action. The other one is IIFL Holding, and that stock too in today's session is up closer to 5.5% trading at 454 currently, followed by the likes of Jindal saw Emphasis see some bar of recovery today, 250. This particular stock actually has seen some significant selling pressure from levels of closer to about 1200, or the stock's now sub 1000 at 979, taken the brunt along with the likes of a Mindtree as well, which saw some significant correction since it's already been very stretched on valuations. The stock had already run up quite a bit, so some profit taking on these names. Interglobe Aviation, 0.25% higher or so. Manav, anything that you're seeing on some of these mid-tier IT names, Emphasis, Mindtree?
You see, looking at the charts for Mindtree, the prices have seen a very sharp breakout happen today, and most importantly, it has breached important weekly resistance line and trading above its short-term averages. The volumes are also quite supportive. I sense that the risk-reward ratio may not be very favorable for any intraday trader, but in case the stock sees a short-term dip towards the support of 835, 840, I think that is the time when one can reinitiate a long positions. Looking at the overall trend, since the prices have declined from the highs of 1180, we could see a swift rally towards the levels of 900. Even HCL Technologies is looking very well placed. I think this is something that we had recommended last time. The prices have seen a good breakout from its sideways consolidation after testing its long-term averages, has formed a very strong support around the levels of 1000, 1020. I sense that the stock is well poised to test its all-time highs of 1120 and eventually even break above that. So if I have to pick something, HCL Technologies and Wipro could be the pick to go forward in case if you have to take a medium-term view.
I should have the Nifty intraday chart going up on your screens. But the highest point of the day for the indices, now up almost 1.5%. So that's 10,340 to a good 144 points higher after yesterday's 50-point cut that we've been seeing. And it's been a gradual move upwards. So it's not like there's been any knee-jerk reaction in any part of the day. But right from the start of the trading session, closer to about 10:30, that's when the market started to make its move, and it hasn't turned back so far. 10,343 on the Nifty. Gurmeet, L&T is reporting numbers today. What are the key factors that you'll be watching out for?
So, the electricity, I think I'll be very keen on both the ANC as well as the hydrocarbon bit. They have made a 5-pronged strategy called Lakshay, which had 2-3 very important ingredients, and one was the reducing the net working capital cycle requirement from 24% to 18%. This obviously is a 5-year plan. They've talked about doubling the turnover to 2 trillion. They've talked about margins, better margins from about 10% to almost 12% operating margins, and on the divestment bit on the non-core businesses. So I would be keen on, but I think it looks like it's going to be a good number, taking a cue from what the other and I think it's the best EPC and infrastructure proxy play right now. And the price levels are, it hasn't seen as much a brunt as the others have in this fall. So L&T remains a long for us from a long-term perspective.
Which is true actually. L&T has been post its correction where it went to levels of sub 1200, closer to 1200 odd, made its bottom there. It started to move up quite handsomely. What's your sense here in terms of whether or not there is enough support at the base to hold it up here?
So the prices have definitely formed a very good support, and the kind of a rally that we've seen in the last 3 trading sessions, it has basically engulfed previous 15 down days. It clearly indicates that there has been a trend change, at least on a short-term perspective. On a medium-term scale, we definitely see the prices are in a broader sideways bullish consolidation, which suggests that 1200, 1230 are the support levels. On the upside, 1400 could be the move that we could anticipate on the immediate basis. So this momentum is likely to at least test the levels of 1400, but when we are looking this on a broader structure and how the momentum indicators is placed, I will not be surprised to see if L&T actually breaks above 1400 and we could see 1600 by next 3 to 4 months. So one should not be taking this on a very short-term perspective, but keep a horizon for 6 months of 15-20% upside. Definitely not ruled out for L&T at the current zone.
Well, that's what's happening with Larsen in Tubro as well. We're waiting for the numbers to come by. Today, the Gurmeet, You know, 2 or 3 days ago, we were talking about this possibility of NBFCs raising some monies via commercial paper. The announcement for PNB Housing Finance came just a while back, 2,450 crores, no less. I don't have a handle on what the coupon rate would have been, but still, the fact that PNB Housing Finance was able to raise 2,450 crores in a single tranche means that in some ways, there is some bit of liquidity that is coming back for some of these NBFCs and the housing finance companies in particular. How well does this augur for the space at large?
Very well, Neeraj. If you see, I think that's one of the key triggers for the market to, really pick up in the second half today. And, we discussed about 20,000 crores was raised, towards the end of the last week. And which had all kinds of names. It had all the names where the ALM issues have been highlighted. And I think I've been speaking to a lot of liquid fund managers of late, and I think we are getting to see some bit of inflows back. I think people shied away post advance tax, and there was a lot of panic. If you see, there's also a change in the ranking order of the AUM because of the redemptions, because HDFC saw very less redemptions as their portfolios had very little exposure to HFCs and some of these the NBFC names. So we're seeing some inflows back. HDFC raised money even at the peak at 9%. Now I think they're raising it about 860, 870. And I think this is also rubbing off in the bond yields. If you see the 10-year, that's about, looking to stabilize around 780, 790 kind of a range. RBI OMOs are helping, and while this public spat between RBI and the government is unfortunate, but I think one key outcome of this would be that we'll have definitely some more liquidity measures. There could be some capital infusion also in some of the, maybe preponement of the capital infusion, maybe, difficult to, say what quantum at this point of time, and maybe some relaxation on, on the SME front. India, I think Prime Minister Modi is also likely to announce some package for SMEs, coming up. So I think something could come up more on the liquidity front, which could further soothe the nerves.
Yeah, we'll talk about all of that and more in just a bit. But in the midst of the earnings season, Dabur reported its September quarter numbers, which missed the street expectations, with higher raw material costs weighing in on the margins. Agam Vakil caught up with the CFO Lalit Malik and started off by asking him about the factors aiding top-line growth. Listen.
Well, I think if we just talk in terms of the top line, as far as India is concerned, what we have seen is that we have grown very well into all the categories of HPC as well as for health supplement. There has been some reduction that we have seen in the food category, especially on juices, primarily because of the seasonality, the shifting of Diwali to Q3 this year compared to the base year where we had juices gift pack sale. So that has been one of the reasons, but subject to that, I think we have grown in the double digit in terms of value. As far as international is concerned, we have seen the top line has grown at a respectable rate. However, there has been impact on account of steep devaluation with regard to the currency in Turkey. At the same time, we have seen in other countries like Pakistan and Egypt also having some impact of currency. Though in these markets, the local currency growth has been very respectable, but because of currency, we have seen certain pull down on that, and that has also got an impact coming on the margins to some extent. So that has been the overall summary that we can talk for this quarter.
Okay, so Lalit, your online volumes at around 8%. What can you tell us about pricing, the way that's panned out for this quarter? And are we looking at any more price changes as we move into the next couple of quarters, depending on the demand supply situation?
Sure. I think if we look at our price increases has been within the range of 1.5%, and adjusted to the mix, it comes to 0.5. Therefore, you see the gap between 8.6 in value versus 8.1 in volume. So that has been the scenario. With regard to the pricing, I think a lot depends upon the inflationary pressures that we see coming on account of crude and coming on account of some exchange related impact of rupee getting weakened. There are certain pressures on the inflation, and therefore there will be pressure on the margins, and wherever there is an opportunity, we will be taking select price increases to offset part of pressure or the impact on the margins.
So Lalit, I'm looking at the gross margins and they have come off to a certain extent. My question really is then about your input costs and the way you're seeing them develop. You have mentioned inflation to a certain extent, but to what extent can that hamper margins going forward, specifically gross margins? What kind of trends are you seeing in commodity costs right now?
Well, what we have seen on the crude related input cost has certainly gone up. We have seen the fuel prices also going up, and coming on the other agro-based product because of MSP, we have seen some prices getting firmed up. At the same time, we'll have to wait and see how the impact of monsoon is going to pan out as we go forward, considering there has been some shortfall in the monsoon this year. So keeping all this into account and also adding it up, as I said earlier, on account of currency impact on the import related products, there are certainly the pressures coming on the input cost, and therefore one has to see what kind of synergies one can draw with regard to the advance booking, at the same time looking into the hedging opportunities. But there would still be some impact that one has to consider while taking into account the price increases as we look forward.
Okay, final question then, Lalit. We're a month into the third quarter now. What kind of trends are you witnessing with respect to growth? Is it possible that we could see double digits in the second, rather the third and the fourth quarter when it comes to growth going in, and perhaps an outlook on the kind of traction that you're seeing so far?
Well, I think as far as our annualized base is concerned, we do expect to see the lower double-digit growth coming up on the annualized basis for this fiscal year. As far as the current quarter is concerned, we have seen a positive traction coming at the back of Diwali festival and having our Diwali gift pack on juices. We have seen the positive impact, but overall we don't see very positive consumer confidence. In fact, that has been little muted. So one has to see the overall market sentiments while considering the performance in quarter 3 and quarter 4, but certainly on an annualized basis we should be having the low double-digit volume growth as we see from here.
All right, this is management of Dabur, and we're getting more numbers coming out. So we've got the Lupin net profit numbers. 268.4 crores is the number that we have versus an expectation of 273 odd crores. So pretty much a slight miss, but we've got a reaction to the stock already. We have to wait and watch to see what kind of revenue numbers have been posted on the top line as well. So 3,988 crores was the expectation versus 3,952, which was a muted 1%. But revenues have come in, I think. Profit numbers are 266, there was a correction there. But the revenue numbers will also come up on your screen. The other thing to watch out for...
3951. Is the revenue number
3951, so that also pretty much in line with street expectations on the revenue front. Going to be watching out for a breakup, particularly in terms of what's happening in the US. In terms of the US revenues, margins were seen lower this time around 14.9%, and what they stack up is something that you need to keep an eye out for. But for the EBITDA number, we'll get that too as well. EBITDA was expected at 596 crores. That number has not yet come up, but we'll wait and watch for it. The stock initial spike, but looks like it's coming off now. So 888 on Lupin.
Yeah, I'm just trying to open the BSE and try and see what the console EBITDA numbers look like. Devina will come in a moment, but the top line and the bottom line numbers seem to suggest that this is bang on in line. Gurmeet, do you track Lupin?
Yes, we do, but our top picks in this space is IPCA and Divis, because we right now believe that the US generic business will continue to see margin pressure, and there is too much regulatory intervention. Every day you have US FDA inspection. We had Dr. Reddy today. There could be something up tomorrow. So we probably are looking at something which is a little more steady. So Divis, for example, again had a stellar set of numbers. 50% generic, 50% CRAMS, which is contract research and manufacturing services. Very good margins. CRAMS give you a good margin. Their generic business gives steady cash flows, so good combination. IPCA, again, market leader in anti-malaria therapy and drugs. They've got an order from a global fund, which is also the WHO partner for supplying anti-malarial drugs. So we look for more where the dependence to a certain extent is lesser on US generics, and they have a good portfolio of both APIs and domestic formulations.
Okay, so that's an inline quarter for Lupin, about a couple of percentage points higher in trade. Manav, I don't reckon you would want to take a trade here.
Actually, the formation looks very, very good, Neeraj. You know, it is forming a good base formation at its long-term averages, and it's called a head and shoulder formation. So when such formation usually take place, you know, you can actually call for a good short-term bottom in place. It has an important support at 850. So in case if there is any short-term knee jerk because of any news announcement, I think that is the time you really get in. Once the stock manages to close above the levels of 910, you can see the stock eventually moving towards the levels of 1050. So the risk-reward ratio really plays very well, and most importantly, it's a very short-term accumulation that has taken place. So I don't see it breaking on the immediate basis unless there is any negative flow. But at the current moment, I think the structure is still intact and one should go long.
All right. Stay on with us, Manav. Praful Bora of Equirus Capital is joining us on the phone line. Just a quick take on Lupin's numbers. Profits, Praful. Okay, I think we've just lost the line. We'll try and patch that line back to Praful. But in the meantime, let's hop across to Yash. He's standing by with the chart of the day. Good afternoon, Yash.
Good afternoon, Devina. Well, what better day to talk about volatility with the benchmark Nifty index moving close to 250 basis points from the low point of the day. But the story has been similar for the month as well, with October being one of the most volatile months in the calendar year 2018. Let's take a look at the chart over here. What it is showing is the percentage change move so far in the 1 year period. Let's get the previous chart up again. And what you'll notice is that the index, which is the Nifty, that has seen moves of 1% on the lower side and on the higher side for 10 times in this month, which is the most in calendar year 2018. The last time, the closest figure to it is in the month of September, when the index swung between gains or losses of 1% for 5 times on 5 different occasions. That apart, a very interesting point to note is we need to run the SEAG chart, the seasonality chart, and that will show you that in the month of October, the index is down close to 5.5%. Now, this is the first time that Nifty has given negative monthly return in the month of October in the last 6 years. So since 2012, this is the first time that the index has given a negative return, and that is something which we are tracking in the chart of the day segment today.
All right, Yash, thanks very much for that. So indeed, it is a pickup in volatility for the markets. Praful Bora is back with us on the phone line. Praful, I'll just quickly run you through the headline numbers. Profits of Lupin at 266 crores, revenues at 3,951 crores, with the EBITDA coming in at 549 crores. What have you made out of these numbers?
So I think, for the past few quarters, I think Lupin has been struggling with the US business. You see I don't know the US number this quarter. Can you just run me through it?
I don't have the breakup of the US numbers. We should be able to get that shortly for you.
I think the number should be, so we were expecting a number closer to $170 million. The run rate has significantly, gone down over the past few quarters. But having said that, I think in terms of, the quarterly earnings, this quarter was expected to be weak as well, similar to what Q1 was there. So I think to that extent, there's no surprise. Going forward, I think there are a few, products that probably can come in, levothyroxine, Renexa, so that will probably take the US run rate up. But for now, I think we were expecting this quarter to be weak, and we're not surprised.
Right. What's your pecking order in the pharma space now, Praful?
So we like Divi's, then we like Ipca, and then followed by Orbin.
All right, got that. Praful, thanks very much for joining us. Quick take there on the Lupin numbers. So it was an expectedly, softer quarter for Lupin, and that's what they have. But stocks moved up about 3.5%. 906 is where it's currently trading. And just quick last comments before we head into break from Gurmeet as well as Manav. Gurmeet, anything in particular that you're going to be putting in fresh money right now?
Yeah, so 2 ideas. One is HDFC Limited. I think, we've seen very impressive addition in the assets. I think on a large base of almost 5 trillion of assets, they're clocking decent double-digit volumes. They also have a great depositor base, which we discussed the other day, almost 1.8 trillion depositor base. We have seen that their NIMs have been very steady between 320 to 350 levels. Their spreads across interest rate cycles have been very steady, and the cost to income ratio is one of the lowest in the industry. So I think once this liquidity issue settles, it's given you a good price correction. The business performance has been steady. I think should be a good gradual accumulation in the portfolio. The other one, which despite subdued numbers is Tata Global Beverage. We see tea prices being firm. The northern part plantations have been good, and the Starbucks JV venture has so far been it's been EBITDA positive now, although there's still a loss of about 30 odd crores. We see their first store revenue is almost 3 crores, which is better than Coffee Day and even Jubilant Domino's. So I think incrementally over next, and this is like a 3-4 year call on this, that incrementally I think it will start contributing meaningfully, and they are exiting a lot of their foreign businesses which are loss making. So a lot of restructuring, a lot of positive triggers coming for these two ideas.
Got that. Gurmeet, appreciate you taking out the time. Thanks a lot for joining us. That's Gurmeet Chadha with his views. Manav, any other stocks that have caught your fancy over the last few minutes of trade?
See, in fact, at the current levels, when we are seeing, the stocks have seen a very good bounce. I think if you're looking at stocks like we've seen a good move in HUL. In last 10 minutes, it has seen a very good breakout from its levels of 1600, and most importantly, the volume is also showing a very good confirmation. The prices are breaking above its 10-day average volume. I think apart from the banking space, HUL would be a good outperformance in the near term, and it has important resistance towards the levels of 1650. So in case if even HUL participates, that could even throttle some more movement for the Nifty going forward. So HUL is something that one can also consider for next couple of trading sessions.
Okay, that's HUL. That's 1618 right now. Manav, thanks a lot. Appreciate it.
Thank you so much.
That's Manav Chopra with his technical calls. Well, on that note, for